Hi, welcome to this Sphere Day. It's the 17th of May. It's Sunday. We're just going to give our update out for the Australian dollar today. Picked out three pairs to look at. We're going to be looking at AUD JPY, AUD USD, and AUD CAD. Now, in last week's weekly forecast, I did mention that AUD JPY, really like the look of it, to come down heavily. A lot of people have said to me, when is that going to happen? It hasn't really moved much. I think a move down is now imminent. A key level of resistance has held. The bullish fundamentals for the Aussie have peaked. I really like it when you've got really bullish fundamentals. You can work out, try and work out if they're discounted or not. And if you're wrong, you've got a key level of resistance that doesn't give you too much risk. AUD JPY is a great looking pair coming in to the new week, but any AUD pair short is, in our view. Now, in terms of going and taking a look at the charts, that's what we're going to do right now. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, all you got to do is click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook and join our Facebook group as well. Right, first pair we're going to do AUD JPY. Right, AUD JPY daily chart. Technicals, go through them in a moment. I've already drawn in a key resistance level. I'm really interested in the way price action has behaved into that level. We'll come back and go through the technicals in more detail in a moment. But to determine which way prices may go, we need to know the fundamentals and sentiment behind the chart. And we do know that the Aussie dollar has been just very bullish across the board. Speculators buying it. Why have they been buying it? Well, there is the view that you're going to get a V-shaped global recovery. For those of you who don't know what it means, it basically means you see a big drop in global growth and trade as the pandemic has obviously hit hard in the global economy. And then, of course, people emerging from lockdown, going back to work. The argument goes that productivity, global trade, global growth will go up and we'll see decent growth as early as next year. That argument is totally flawed. Also, one of the foundations of the argument is that China is doing well. China's not doing well at all. Okay, I'll return to these points a little bit more detail in a moment. But in terms of one point that is true is, Australia's dealt with the pandemic well. Managed to contain the virus. Lockdown eased up, but in the big scheme of things, Australia is an export-led nation. It needs to export, and there's no question that in terms of the economy internally, it's not in good shape at all. In terms of Australia, last week they reported unemployment at 6.2%, which is well under half of what it is in the US, and people are saying that's really good. But the true figure is double, isn't it? It's just the way that Australia does the unemployment data, which is in a different way to many other countries. So unemployment, not good. Numerous structural problems in the Australian economy, from low productivity to low wages. You've got housing bubbles, you've got high debt. It's not in good shape, and it needs to export to recover. Okay. Now, in terms of its major export partner, that is obviously China. China's export markets have dried up. Now, all people say about China's been back to work for a while. Well, doesn't really matter, does it? If you haven't got anyone to sell goods to, then it doesn't matter. And there's no question that China export markets have suffered, in our view, far more than the official data shows. The official data in China needs to be treated with caution. And I put, in China, you've got 70 million plus unemployed. The official number is a quarter of that. Where does this number come from? It comes from actually someone senior in a Chinese government body. I've posted the video in relation to it on my Facebook page. You can go and check it out. But that's really bad news for China. So many unemployed. It's a social order problem. Also, it's showing that, while businesses are open, there's not exactly big hiring going on. Now, China, export-led nation, but what about internally its consumption? Well, internal consumption is pretty low. And in terms of the internal consumption, the consumer is not spending. Retail sales, latest data shows they've collapsed. Again, there's a chart and some explanation on my Facebook page. The consumer worried, like consumers are around the world, they're not spending. Okay, so China, real problems. And you've got the decoupling of trade due to the virus as well. What I mean by that is that a lot of people have criticised China for the way they dealt with the pandemic. Obviously, Donald Trump very vocal, but other nations are concerned as well. Eurozone, for example, Japan, even Australia. And China is not taking it lying down. They've exchanged insults with the US, Australia, for example. You're going to get less exports from Australia to China, and tariffs and so forth. That's already about to come in, or has come into effect on certain products, I think. But no, relations are not good. But aside from the relations between Australia and China, China is in deep, deep trouble. It's never going to recover to the exports that it did, say, early last year, because a lot of nations have realized they're too reliant on China, trying to pull their businesses out, Japan being the prime example. Now, in terms of a V-shaped recovery of the global economy, as long as the virus is around, there's no vaccine, it's just not going to happen because consumers are worried. You don't just see it in China, you see it in America as well. They're not spending. They're worried about the outlook going forward. Obviously, unemployment's a big thing. You need strong consumer consumption. It isn't there, okay? So there's going to be no V-shaped global recovery in our view. So really for us, the good news is in the price for the Aussie dollar. It's only going to get worse, okay? Now on the other side, said this in numerous videos, Japanese yen is oversold historically. It was oversold or sold hard over the years due to the yield disadvantage it had. Negative rates, of course. Till recently, Australia had decent rates, but of course Australia has had to cut rates, as just every major economy has in the world. So that big disadvantage is no longer there for the yen. The yen should remain firm when you have investor nervousness. If we get a crash in stocks or a big correction to the downside, then the yen, number one, safe haven currency. So for us, the good news is in for the Aussie, and the yen is oversold. And Australia is the most exposed G7 country to global growth and trade, so it could get hit hard, but it has had an impressive rally. That's about 15%, isn't it? And after this big fall here, okay, the rally back is nice, or when I say nice, it's a strong rally. Very often, technicians know this, if you have a gap, very often price action comes back to fill it, which has happened there. Now, when we came up here, there wasn't much volume. No buying power to force away from the 70 level. Came down, came back up. No volume again on those two candles there. And now we've drifted off the level. So we've had 4 attempts to get through a big level. We think the Aussie fundamentals, the bullish argument is discounted. And we have come down a bit. It's not much. Volatility is low. That points to a big move. We think it's going to be to the downside. Now, in terms of just draw trajectory in there, Friday's candle close was quite a nice close at the low. 68. I'll just give a little bit on the downside, come through the blue tail, which I think is 68.55. See if she runs. There is the level I think we're going to get to as a first target. Okay. Obviously, we don't break low. You can just key off the 70 level. Look for a weakness off the level and sell. I think it's only a matter of time before this one breaks. Okay. And you can see it's a really nice risk against the reward. Our stop is at 70.40. Okay, so just nicely back from the round number. If we were taken out, we would think about probably going back through the 70 level. But I think it's got great downside potential on the daily chart. I think this level could be hit pretty quickly. Longer term, I'm looking for 50. I'm really bearish of the global economy, stock markets and so forth going forward. But that would mean a 40% fall from the current price. Now, that might not happen. Okay, it's a long-term projection. But yeah, I certainly the daily target could quickly be hit. Yeah, we're sort of getting ready. I thought we'd have broken lower by now. I think next week it could happen. And the Aussie dollar overbought everywhere. Let's go and have a look at next two pairs. So we look at AUD first, then AUD CAD. Right, let's shift over to the charts. Right, AUD USD now in terms of the last two trade setups, just using charts from our member center. Now, in terms of the AUD, nice rally up to resistance. Okay, come back down, come back up to test two low volume candles there, and down. Okay, no volumes. Okay, into resistance. No conviction to break above the level. Volatility has dropped down as well in recent weeks. I just feel the uptrend is exhausted. If you're coming in fresh, personally, I think it's just through the round number here, 64, nice support. 63.80 will do it, which is actually our entry. So we're a little bit underwater at the moment. Then see if she runs the downside or just sell any weakness of resistance. I think that resistance level is going to be really hard to take out. So nice risk reward to chart those in the coming months. So I think we could go down to monthly support at 50, but that of course is a longer term view. Now a lot of people are saying in terms of the USD, well, the USD should go down because the Fed are printing so much money. That is true, but there is a global shortage of dollars. That's why the printing is so large. That will not debase the USD. If you think about it, is the global reserve currency. As long as we have a kind of dire outlook for the global economy or a cautious investment world, the USD should remain firm. If we get a big risk off, the USD will strengthen behind the JPY. So JPY first safe haven, USD second safe haven. So I really like the look of the risk reward on this trade setup. If you were not a USD bull, just look at the trade setup for Euro AUD. It looks really attractive. Aussie is so overbought. I'm a Euro bear, but Euro is definitely, in my view, I should say definitely, but it's got a high probability of bouncing on the AUD. So Euro going up on AUD. Let's have a look at a cross, which I think looks quite good. This is AUD CAD. Personally feel, mentioned it in previous videos, that going forward, Canada is going to be the strongest of the commodity nations. So the Canadian will be the strongest of the commodity currencies. Nice rally up. Again, low volatility, just exhausting. Okay, into daily chart highs here. I pop my stop back behind the next round number, give it a bit of room, and I think, again, nice level of support here, 90 level. Just get through that 90 level, 89, 80, and it's a really nice risk to reward. I think going down to here, 86 is also a support level, which I didn't draw in, but yeah, really good risk reward pair. If you look at AUD NZD as well, the AUD has had a massive move up on the NZD. There's due a big breakdown there as well. So Aussie very extended across the board. I think we should hopefully see a sell-off next week. I'm looking for a little bit of higher volatility in AUD pairs. I'm hoping that higher volatility is going to be with the Aussie going down and not to the upside. But regardless of what happens, I think the AUD looks a really good risk to reward sell as a currency against numerous others. Hopefully I said that correctly. Right, yeah, that's it for today. Thank you very much for watching me as usual. Take care. Have a good day.